Okay, everybody, it is me, Gregory Mannarino. It is Friday. Thankfully, it is Friday. Another week in the Freak Show. We're almost done. We just got to get through today. So, yes, Friday, July 15, 2022. I want to step back for a moment and put a perspective on what is happening right now. And I don't think many people are aware of this. Maybe you are, but let's see. Currently, we are watching another phenomenon occur. What is that phenomenon? Despite what we're hearing from central banks and from puppet government leaders, global debt is ballooning, continues to balloon at its fastest pace ever on record. As a matter of fact, every day we hit a new record. And it's funny if you think about it. Why is it that you'll never hear this from a single mainstream media outlet? No puppet leader like Mummy Man, Biden, or any world leader is going to tell you this. Central bankers won't tell you this. No one's going to tell you it. You understand the dynamics behind this if you follow this blog better than anybody else. That's the truth. I've kept all of you on top of this for many, many years, the phenomenon of debt. So it seems like, at least right now, it is, we are in an environment of ever-expanding debt, which can never stop. You understand the mechanism behind it is the debt-based economic model. But this mechanism here is also hyperinflationary. Henceforth, why we're seeing what we are. Again, what are central banks doing? They're determined to continue to inflate by any means. Understanding that makes it clear as to why you are seeing the current environment. This is something that has been going on for many, many decades. It really got going. I mean, it took off after the last meltdown in 2008. That was it. That was the party over moment here. But what central banks have decided to do, none more so than the Federal Reserve, pointing at my hat over here, is take over the market and now accelerate this current debt expansion cycle. That's really what we are in. A debt expansion cycle unlike anything we've ever seen in the history of the financial world or anything else for that matter. As you all know, a Herculean effort right now is going on to keep rates suppressed, to keep the debt market from fragmenting. Not my word. This is the European Central Bank. They came up with this lovely word, fragmenting of the debt market. What does that sound like to you? A breakup of the debt market, an implosion. A lot of efforts going into this. It's going to work until it doesn't. Understand, central banks, the Federal Reserve, the ECB, they have unlimited firepower, but it comes at a cost. And that cost is what we're seeing now, and that is skyrocketing, surging inflation. They all knew this was happening. In order to keep this system going, they have to inflate the debt. It can't stop. But, as you all know, in my opinion, we're leading up to a climax, a moment of maximum saturation where surging inflation is going to offset this ballooning global debt issue. Does this make sense to you? Okay, and then we're going to get a lockup of the system, period, the end, by design, and then a new system of maximum control is going to be instituted. That's how I see it playing out. Now, if you see something different, I would love to hear from you. Look, I'm not too old to learn a new trick or two. So please post here in the comments. You know, Greg, this makes sense to me. You know, Greg, it doesn't make sense at all. This is how I see it's going to play out here. But realize what the grand plan is. The grand plan is a new system. And I think if you can understand that, then we're on the same page. How it manifests itself? Well, let's see. I'm giving you my best take on it. You understand? All right. Now let's turn our eyes over at this market. What an incredible day yesterday was. A seriously miraculous turnaround in the market. But remember, the Fed they don't buy the market. No, they buy everything else by their own admission. But they do not buy stocks. I'm laughing. This stuff cracks me up. So on the back of that miraculous turnaround here, we got some economic news today. Apparently retail sales came in somewhat better than expected. Well, what are people doing? They're borrowing and borrowing and borrowing just to make ends meet. They can't survive. Members of the middle class, more and more former members of the middle class are falling to the lower rung of society. So yeah, they're buying things possibly, and I'm just throwing this out here. But it's more the affluent, it's the rich who are continuing to get richer in this environment, and they're the ones with the pockets deep enough to make a dent here in the current environment. Anyway, back to the market. So you got stock futures right now that are higher. Let's see how that plays out. Okay, a lot of effort going in to cause this mechanism to occur. 10-year yield, 2.92, didn't move too much from yesterday's close here. The environment is simple. Keep rates suppressed, create the risk-on environment. Risk-on meaning push cash into the stock market. This is central banks manipulating the markets. They only can do one thing. They can manipulate debt. That's what they do. By manipulating debt, they can push cash around in the market where they want it to go. And that cash, they want it to go into the stock market, period, the end, until we get that sell-off in the 10-year yield. And I believe it's going to occur. Again, we saw it. It started. That prompted the ECB to initiate emergency monetary policy, ECB to initiate unconventional policy. We've had quite a ride in this market as of late on the back of what's going on. And realize what I always tell you. What is the stock market? The stock market in aggregate is a derivative as to what is occurring in the debt market. In other words, the stock market itself and pretty much every other asset derives value from what's happening in the debt market. So with that said, realizing that central banks have been in here since 2008, well, way before that, but I mean, really getting in here and manipulating the system here, you can realize that there's not a single asset today that has a real price discovery mechanism behind it. I think you get that. Anyway, stock futures higher right now. 10-year yield 2.92. Crude oil catching a bid. Gold essentially flat. Silver catching a little bid right now. Cryptocurrency is doing well. Okay, you got Bitcoin around 21,000. The Dixie, or the relative strength of the dollar, and you know how strong this is right now. It's getting stronger, although this morning we are slightly lower. But understanding the mechanism behind that here, being that dollar remains, right now, world reserve currency, and it will remain there until there's a war, until many, many, many millions of people are dead. I believe they're going to take down the system before that would occur, but I could be wrong. I could absolutely be wrong. Obviously, this war over there is expanding. The one that is a proxy war with Russia and the United States, we are funding that to the tune of many, many, many tens of billions, hundreds of billions of dollars, soon to be in the trillions. It's a mechanism, as you know, crisis to crisis to crisis. That's the new economic model. It's a crisis to crisis to crisis economic model. And they're going to continue with this mechanism. Well, that's it. That's the new thing. It's not going to stop here. It gives puppet governments, brain-dead presidents, a blank check, courtesy of all of you, to fund anything they want to. Okay, and all this is again a mechanism to cause this incredible debt expansion cycle to continue until it doesn't. And what I mean by that is we're going to see again a sell-off in that debt market. This can't be sustained. What's going on now? I mean, there's, like I said, a Herculean effort to keep this mechanism here of ballooning global debt going. It cannot be sustained indefinitely. Why? The trade-off here is massive inflation. And we're seeing it manifest itself now. But be ready for it. You're going to hear the propaganda ministry read their script, and they're going to tell you again every single day that what you are seeing with your own eyes is not real. What did they float out yesterday? Oh, food inflation. This just blows my mind. Year over year, food inflation is only up 10.4%. I want to hear from you. Do you believe honestly, that food inflation, that's what they're telling us, they're trying to convince you of this, is only up 10.4% year over year, what are you paying more than 10.4% for your grocery bill? I really honestly want to hear from you, because I can tell you I'm paying a hell of a lot more than that. I'm paying probably over 100% more. But I don't know. Maybe I'm the exception to the rule. What about you? Do you believe the propaganda? Is this real, or is this another absolute fake distortion, deception, twisting of the truth? That's what I think it is, but I want to hear from you. All right, people, that's where we stand this morning. I hope I have outlined for you what's going on. This unprecedented debt expansion cycle just to keep the system liquid. You understand? We're going to march towards a liquidity crisis. I've been telling you this for the longest time. It's going to happen. But they must find reasons and create more reasons to keep pulling cash into the now that allows the system to function. The Federal Reserve, with their repo scam, passing cash, trillions of dollars back and forth overnight in between institutions, giving the illusion of more liquidity in the system. That's what's really behind it, but you're not allowed to know that either. All right, look, I'm out of here. I really do love all of you people. I mean that from the heart. Please share it. Comment on what I have asked here. I want to hear from you. What do you think about what I'm talking about in this particular video? Does it make sense? Am I out there? Am I not making any sense to you? Please let me know. I'll see you at the end of the day. I'm out of here.